Hi, this is Rob Sedigatpour with my partner Mitch Flaherty for the STRATCO B6 webinar on proposed federal tax changes for 2021. We're here with John Boykas and Jeff Feinstein. Last time four of us were together was approximately a year ago discussing the proposed proposed changes for both of the presidential candidates. We're here now under the Biden administration, and John and Jeff are going to lead us with some scenario analysis on the changes. Mitch, can you pull up the presentation that we have prepared? And then John, if you can lead us through a conversation on what's on the table, and we'll go from there.
Sure, glad to do it. Earlier this year, the Biden administration released a outline of some of their current tax plan, and also what they're going to spend the money on. But we're just going to talk about the tax side for right now. The first item that makes sense to talk about is the increase in the top individual tax rate. Now, this is only for people that are earning over $452,000 for individuals, or $509,000 for married couples filing jointly. The rate would go from 37%, which it is currently, back up to 39.6%, which was the rate that was in effect prior to the Trump tax change in 2017. In addition, the Biden administration hopes to increase the tax on long-term capital gains. Long-term capital gains right now is taxed at 20% with a 3.8% net investment tax. They want to change it and tax it the same as ordinary income, which would be a 43.4 combined tax between the regular income tax and the net investment tax. Another item that they're looking at is to restrict like-kind exchanges, which allows for the deferral of gain if a property is sold and replaced within a 180-day period. They want to eliminate that so that deferral of gain is no longer available.
John, if I just jump in with a quick question there,
sure.
Because obviously that's like eliminating 1031 exchanges to the real estate industries. I think sends a shiver down a lot of the spines of a lot of conversations I'm having at the moment. So I was just wondering, I appreciate it, you don't have a crystal ball, but what are the likelihood of the 1031 getting eliminated?
It's difficult to say at this point. Congress is divided pretty evenly right now. Obviously, the Senate's 50-50, with the Vice President Harris being the deciding vote. Many of these tax proposals theoretically need to go through, have a 60 vote majority in the Senate. There is a way of doing some of these things depending upon how the parliamentary rules work, and doing what's called budget reconciliation, which only requires the 51 votes, which would be the 50 Democrats plus one, being Vice President Harris. Most of the Republicans are completely against almost all of these changes. Will it go through? I don't know. It really depends upon how the Democrats hold together, and some of the more outrageous increases aren't even really supported by all the Democrats. So some of these things probably have very little chance. The restriction on like-kind exchanges are one of them that I don't think would necessarily go through, primarily because it is such a big, it gets so much use in the real estate business, and would slow real estate transactions dribble as opposed to the open faucet that we have now.
Jeff, if you had to rate between these six, with the likelihood or of which ones would end up passing, which ones are going to come to a standstill and be dropped, how would you tier them?
I guess we have a $12 trillion stimulus or so that we have to solve, and the most likely that they're going to achieve is just going to be to raise taxes, which is the first point, which is just raise taxes on anyone that makes above a certain income level. That affects, of course, people that are W-2 income earners that aren't necessarily in the business world. You can work in real estate and make a lot of money, and with depreciation, other tax strategies, it might not affect you as much. But I think they're going to have a very tough time changing the estate tax exemption. I think they're going to have a tough time changing 1031 exchanges and the effect that would have on the real estate market. So I think they're going to traditionally stick to earned income and potentially change the long-term capital gain rates.
And again, I appreciate you have a crystal ball, but what sort of timeline are we working with? I knew that the new capital gains will be implemented 1st of Jan next year. Do you have any sort of idea on timeline when decisions will be made?
I don't think anybody really knows. I mean, we thought that this would happen relatively quickly, especially now that there's a Democratic president and a Democratic House. So nobody really knows, but that doesn't mean that a lot of people aren't preparing for it. I was on a estate planning call today where a husband and wife were setting up a trust, a family trust. And the estate planning attorney said, let's have this ready just in case they change the estate tax exemption. And it's not something that has a look back period for 2021. So I think a lot of people are getting prepared for these to be implemented, the ones that they can really do some planning around. But the other ones, no one can really change. You can't really change anything related to long-term capital gains. You can't do any planning around the individual tax rate. But the other items, people are really keeping estate planning attorneys very busy these days.
Yeah, I can certainly echo them thoughts. A lot of my conversations have shifted recently in the past few weeks with owners. Think about whether if they are going to sell, then they want to get done by the end of the year just to be safe. And our CEO, Paul Massey, was reminding us back in 2012 when there was a last capital gain increase that Massey Knackle sold 100 buildings in the month of December. So, we're anticipating a busy end to the year for sure.
I think there's going to be a lot of value too in your world, Mitchell, just because transactions are certainly going to potentially slow down if they do implement this 1031 exchange and buyers and sellers and people to free up capital. So I think it's going to be the real estate market's going to be the most affected, but hopefully this 1031 program that they have and other things that they've implemented, such as the opportunity zones, are going to be things that are going to keep on having investments in urban environments. And that's the one thing with everything we've been through, what this effect would have on New York City would just be really, really impactful if they were to eliminate both those two items. So I'm curious as to your thoughts too. That could be, we could turn it around and do a webinar with you. But I imagine you're keeping very busy with these days with conversations around, investment sales.
Yeah. Depends on the asset, but also, it takes time to sell the asset. So I think really within the next couple of months, you'll see a lot more listings come to the market. So, brokers like myself can run that process and get it done by the end of the year.
Yeah. So I think it's going to be very interesting. The same thing for Rob's business, of course, and taking advantage of all the tax programs related to energy and such. So like I said, to answer your question, there's no crystal ball, but you can do a lot of planning just to get prepared for when and if they implement some of these changes.
So on the follow-up slide, we have everyone's contact info. If anyone wants to follow up. John, any final comments on what's being proposed here?
And just that, it is up in the air at this point. Theoretically, they could pass the law today and make it retroactive to January 1st, 21. Again, I doubt it, but nobody knows at this point. Everybody just has to be alert and be ready to be a little bit nimble and react accordingly.
yeah, maybe in the next few months we'll get together and we'll see what's changed. I'm sure a lot can change in a few months. So
It changed in a week.
yeah. On that note, thank you for joining us, Jeff and John. We really appreciate your time and insights. It's very interesting, and it's interesting to see what happens going forward. So stay tuned for another webinar shortly.
Thank you.
Thanks, guys.
Thank you.